host, Ola Dantes. I've got Sam Hales with us today. Hey, Sam, how are you doing today?
Fantastic, Ola. Yeah, thanks so much for having me on.
No, my pleasure. My pleasure. So, I mean, we were talking just before we got on the show. Yeah, you're in Northern California. There's a lot going on with the fire. So I'm sure you guys are somehow adapting. So, yeah, thank you for
Yeah,
still
that's
coming
right.
on.
Yeah. If we get evacuated in the middle of the show, we'll just pick it up again sometime soon, right? Yeah.
Right,
It's kind of
right, right.
it's kind of crazy out here right now.
Wow, wow, wow. Yeah, so I hope you guys are obviously going to be safe, and yeah, thank you, for still coming on the show. So let's jump right into it. I mean, you're doing a ton of stuff, mobile home communities. You guys are doing a ton of great work, and then more specifically in opportunity zones. So we're going to talk all about that. We're going to try to unpack that. However, though, can you kind of just tell our dual listeners a little bit more about who you are, kind of how you got started, and what you're doing kind of lately?
Yeah, awesome. So, started Saratoga Group just about 10 years ago. Initially, we were doing single-family homes, raised, in fact, a fund to buy a bunch of single-family homes, renovate, flip them, put them on lease option, uh, that sort of thing. And did that for a few years and figured out, number one, that's a lot of work. Uh, like doing the, and in fact, Ola, I think I heard you talk about that at some point. I think you started in single family as well, and you don't do that for very long before you kind of realize, man, there's got to be an easier way to do real estate. But anyway, it was a good time to do it, a good time to start. I mean, we were really looking at single family as a commercial asset class. So we were looking at yield, right? So I mean, because when you're doing real estate, the thing that you know the least about or have the least predictive power over is what it's going to sell for, right? So that's what really attracts me to any sort of commercial real estate. We're talking about yield, we're talking about cash flow, because I figure if we can make good cash flow, the exit's going to take care of itself. So anyway, started in the single family space, and then about 3 years ago, as it became more apparent that single family was going to be difficult, the yields were going way down, that we started looking at other opportunities. We've done a boutique hotel, we've done some office, kind of dabbled in it, done quite a bit of land development and land entitlement, uh, but then got turned on to mobile home communities, and it just had some characteristics about it that made a ton of sense for me, especially as we think about where we are in the economic cycle, and how mobile home communities and other affordable housing does during a downturn. So anyway, that's kind of the Reader's Digest version of our story.
No, thank you so much for kind of giving us that synopsis. And you would actually be the second, no, actually third guest that I've interviewed in the past month, actually, with,
Oh, okay.
yeah, buying mobile home parks. And,
Yeah.
one of the guests actually was in multifamily and is now in mobile home parks. And, it's really fascinating. And it is telling me kind of the IRRs he's seeing and the returns he's getting. And he's like,
Yeah.
whenever you're ready, Ola, let me know.
Yeah.
So yeah,
Yeah.
it's becoming really interesting for me personally, actually. But my question to you is, and I asked everybody, even Frank Wolf, as I said when
Yeah.
he was here, do I have to own a gun to invest in mobile home parks?
You don't have to, but I will say it's maybe not a bad idea. And can I comment a little more on that?
Of course.
Um, so so when you look, there's about 44,000 mobile home communities around the country, and a number of these were built in areas that honestly you and I and others are going to look at it at some of these economic areas and say, you know what, we don't want to own a mobile home park there. Um, so in general, for us, we're kind of looking for mobile home communities that are pretty close to a large MSA. Sometimes, we've got one in downtown Atlanta, we've got one in Marietta, Atlanta, where there's a large population around there, and those are sometimes the ones where you see more of criminal activity that you have to take care of and deal with. Uh, but what we like about that is once you can get that cleaned up, you're in a population center, and there's so much economy around you that getting it filled up isn't a problem. So anyway, we've definitely had to deal with some of these criminal issues, and they can be challenging for sure.
Okay. Yeah. So thank you for addressing it. That was just kind of like a fancy question, I guess. And I was just kind of intrigued by it. But I kind of wanted to
Yeah,
go back a little bit, right? So you started Saratoga, group, like you said, 10 years ago. You had a fund. You guys were flipping, lease optioning, doing all kinds of stuff with single family
yeah,
properly, right? You weren't like a one-man band with a truck or whatever. Like you were doing this properly, but you
yeah,
still made that shift, right?
yeah, yeah,
So for me, I was just kind of thinking, you made that shift 3 years ago, but then you kind of went into hotel, office, and then you kind of did some land, and then you fell on this particular, asset class. What I want to ask you though is, when you were doing the single family, what were the major pain points? You could just mention a few that really pushed you over the edge. Like, hey, I just need to find something different.
yeah. I think really what it came down to is the scalability, and not to say, I mean, there's groups like Waypoint and Blackstone and some of these others that they really have figured out how to scale it. Um, but what I figured out is, don't underestimate what it takes to scale a single family business. It's a ton of work, because then if you want to go visit 100 units, if you own multifamily apartments, it's like, cool, you just show up at your property and there you are, right? You can walk all your doors in like 30 minutes. Um, and if you're single family homes, I mean, even if you're very geographically focused, to go visit 100 doors is going to take you 3 days, right? And so there's just a scalability there that makes it. I think the reward versus the effort is just kind of too much effort for the amount of reward that you can see. That's really the biggest challenge. And like I said, there's people that have spent a lot of time kind of figuring that out and developing software and systems and efficiencies. But that's a tall order. I mean, it's a big hurdle to climb.
Yeah, that's a good one actually. Yeah, I just kind of wanted to see if there were any dual listeners kind of thinking of, yeah, why would, a business make that kind of decision? So thanks for addressing that. So then
Yeah,
you went into like office, like you said, and you did some, boutique hotels. What I want to ask you though is, you were kind of making this kind of divergent, I guess, shifts right into different asset classes. Did you have to get a
yeah.
mentor to help you with the hotel, or did you guys go to a seminar to do like land flipping? I mean, how do you kind of make this pretty dynamistic moves? It's pretty interesting.
I Interesting is a good word for it. Yeah, I've been accused of a little bit of ADD when it comes to real estate, and yeah, I mean, I love a new challenge, right? I kind of love going and figuring out, hey, here's a new asset class, and here's some of the constructs, and here's some of the challenges, and that sort of thing. So anyway, I really didn't do workshops, or I do a lot of just kind of self education through podcasts and that sort of thing. And that's what's so awesome about today's economy and the digital age is, I mean, you can go and get that information. It's very accessible. People are willing to share, through podcasts, through books, articles, all that sort of stuff. Um, yeah, I mean, so I'll mention the boutique hotel real quick. I mean, I'd never done anything in the hotel space before, um, and what you find is there's these great tools out there, and it's not just for hoteliers; it's for all sorts of other spaces where you buy some cloud software, you plug it into your website, and you look like you know what you're doing, even when you don't. That it's just there's so much out there now that really makes real estate in general approachable where it hasn't been in the past. If you're just willing to dig in a little bit and kind of find out about a new space, you can learn a lot of what you need to know relatively quickly. Now, that being said, there's always nuances, right? And some of that stuff you're never going to figure out by reading a book or listening to a podcast. You simply have to do it, and so that's rounded out the experience for me, is some of those uh, challenges as well.
Totally agree. Totally agree. So now you kind of fell on this asset class, and I'm guessing your ADD has kind of just vanished, right? Is that fair to
Well,
say?
no, it
No.
has, and not to say that. No, really, yeah. I mean, other things come along, and I'm like, you know what? Focus. Like this is what we're gonna do. Um, I think it's a great vertical. Like I mentioned, in this economy where asset prices are very high, there's a lot of exuberance in the market, and not just real estate, but in pretty much all capital markets. That this is an asset class where there's still a lot of value add opportunity, and they tend to do very well even when the economy goes down. So we're shutting out the other noise right now, and we're really 100% focused on mobile home parks. And the
Interesting.
exciting thing for me. So we take single family, and yeah, I mean, we see the cycles. And especially in California, we see these lots of valleys and peaks, right? And so you have to be pretty nimble when you're doing single family to kind of know when to get out and maybe when to get back in. Uh, what I like, one thing I really like about the mobile home park investment space is that because it tends to do well, there's actually increased demand when the economy turns down. That it's something that we can just kind of continue to do and continue to build over time, and good market or bad market, these assets tend to do pretty well.
So if I'm a dual listener and I'm thinking, hey, I like what Sam is saying. I want to look into a mobile home park, maybe in my area, maybe there's somewhere in the country and like they want to get started. What would you say are kind of like the first steps for them? And maybe after that, we can kind of jump into opportunity zones, but let's kind of just kind of break down
Yeah,
that
yeah.
process for someone that's pretty new to the game.
Okay, so and you're basically asking somebody wants to go buy a mobile home community, like what should they be looking for? What are Yeah, okay, awesome. So you could certainly make mistakes in the mobile home park investment space, just like any other space. I think the biggest mistake that I've seen is, well, I'm going to talk about two of them actually. First of all, is being undercapitalized. So it's very easy to look at a mobile home community and think, okay, hey, we're not going to own homes. Other people are going to own the homes, and so we're just talking about the real estate here. And so maybe we need to put a little asphalt on the roads or reseal the roads. Maybe we need to do a couple water sewer line repairs. And so a lot of times people aren't developing a robust enough budget around what needs to happen to really make that mobile home park um, hum. And so for example, every time you're getting a space ready to bring in a new mobile home, depending on the state, there's going to be different requirements there. I mean, that can cost a couple $1,000s. It can cost $10,000. I mean, just depending on some of the local jurisdiction requirements and the state of these lots, and if they've been the previous owners have been very negligent, there's going to be more of that than maybe first meets the eye. Um, and I just kind of compare that to, for example, in standard multifamily. I mean, people can get pretty close with their capex budgets. It's pretty well recognized. Oh, okay, well, here's what we're going to do in the kitchens. Here's what we're doing in the bathrooms. Here's our budget, and you kind of dial it in. There's in a mobile home park, it's easy to be off because the amount of the improvements relative to the real estate is much lower, right? And so $100,000 difference on a capex budget that maybe was only 150 in the first place, that's a huge, percentage-wise, that's a huge difference, right? And whereas, if it's a $5 million budget for this 150 unit apartment building, well, that's kind of in the noise a little bit. You've kind of got that covered. Um, so I would say that's maybe the biggest one, is that. And then the other thing that can get people in trouble is private utilities. So sometimes these mobile home communities, instead of being on public water and public sewer, are going to have either septic fields for the mobile homes for the sewer, or maybe they're going to have their own wastewater treatment plant, or they're going to have a well, and all of those come with their own kind of risk profile. We're actually in escrow to buy a portfolio right now. One of the parks in there has a well, and the well has some contamination, right? And so that's one of those things. It's like, well, we're glad we know about that now, and that's all going to get worked out before we close. But um, it's going to cost the seller almost $900,000 to build this filtration system for this well. I mean, and so if you, I mean, that's the sort of surprise that could completely unravel an investment. So anyway, those are kind of the two things that I kind of caution people to be the most careful about. But then as far as purchasing, and evaluating a mobile home park, I mean, it's like a lot of the real estate. You start looking at the yield, you start looking at, your cap rates and that sort of thing. What becomes even more important to us, though, is really, we buy a lot of mobile home communities that have a significant amount of vacancy, right? So if we're buying in an area where we're very confident and we do test ads and all this sort of stuff that we can fill these in, then we're maybe paying a little less attention to the cap rate. We're more, what becomes more important to us is, well, what could we do with this? I mean, as we fill this in, what is the opportunity here? And that's, I mean, you think about it this way, Ola, if you found a standard multifamily apartment building and it was only 60% occupied, you'd be like, what the heck is going on here?
Yeah,
Like,
that
why is
would scare
nobody?
some of our investors.
Yeah, absolutely. And like I said, across the board, our mobile home parks on average are 60% occupied when we buy them. And the reason is you've only got half of what you need to have somebody move there, right? You've got a lot, and you've got the sewer lines, you got the water lines, you got the electrical, but you don't have a home. And so you've got to bring in the home. Once you bring in the home in, if you're in a decent market, you're going to be able to fill it no problem. But that's the part that a lot of these sellers are also undercapitalized. They don't have money to kind of bring these new homes in and stuff like that.
Oh, that was my next question though. Like, so what do you guys do apart from kind of the, deploying CapEx to, like you said, tile the roads or whatever, apart from, really deploying capital, what do you guys actually do to get people to move into a mobile home community? I'm just kind of curious.
So the very first thing that we do, and this will take a different amount of time depending on the community that we're buying, is we simply make it a safe, clean place for people and their families. Like that's like if we can do that, and honestly, most of the ones we buy, it's actually can be a little upsetting to me to see the condition of some of these communities and the fact that like as an owner, like do you not you have no concern for how people live. You know what I mean? I mean, it feels like, hey, here in the United States of America, there should not be people living in the kind of squalor that we have seen sometimes. So anyway, and that's really the first thing is before we think about moving in new homes, before we think about moving in new people, we've got to make it safe. We've got to make it clean. We've got to make it the sort of place that you and I are proud of to some degree, right? Where we drive through, we're like, hey, this looks nice. Like this looks inviting. So like I said, that could take 3 months. That can take 12 months, and that's what we do first of all. Once we've done that, then we know we can attract the kind of people that we want to attract into the community. So then we're going to start, running our advertising, bringing new homes in, fixing up. Well, of course, along the way, we're fixing up the homes that are there already. Um, and then that's where you really kind of make up uh, the investment. I mean, that's where the magic happens is once you're able to obviously start increasing your occupancy and moving new people in.
Awesome. So we definitely want to talk about a case study. So you can pick a community where you guys acquired, a mobile home community where you guys kind of bought. So just tell us, how did you find the deal and how did you fund it? Are you syndicating? Like, just give us kind of the old spiel and the story behind that deal.
Awesome. Yeah, I think the example that I'll use, we bought 2 communities in Phoenix City, Alabama, which is right on the Alabama-Georgia border. There's Columbus, Georgia, and you go over the Chattahoochee River, and there's Phoenix City, Alabama. And this was one of our first acquisitions. The one park was on the market. When I say on the market, it was commercially. It was through a commercial broker that kind of sends it out, syndicates it out nationwide, so that other. I mean, because the mobile home park space, it's a very national type buyer and seller kind of database. So that one was sent out nationally, but we really liked the kind of the demographics, and we especially have been successful in marketing to the Hispanic community, and there was a strong Hispanic community there, and we just felt pretty confident that this was going to be a really good market for us. So that was one community, and we got into escrow for that. I flew out to Georgia to do my due diligence trip, and as I'm driving to the park, right before I get there, I see a sign on the right-hand side that says mobile home park for sale. And it's got this kind of beat up looking sign, and then the numbers kind of rubbed off and whatever. But so I go to the one that I'm in escrow for, and I'm down there, and you know, one thing you always do on a diligence trip is you go see the competition. And so I'm asking them, I'm like, man, I saw a sign down the street, and you know, nobody knew anything about it. But anyway, I went down there, and it was a local broker, never sold a mobile home park before, didn't know how to get the word out to the buying community. These are my favorite ones, right? Because you know you have a seller, right? And you've got a seller that is, I mean, it's been on the market for 9 months in a pretty hot real estate market, and they're thinking, man, we cannot find a buyer. We can't find a buyer. And so we were able to pick. So anyway, between the two of them, we bought the 127 spaces was the one, you know, through the national broker. We got that for 2.1 million, and then this other one was 113 spaces, and we got that for $900,000. And so it's yeah. Hey, Ola, I am not able to hear your audio right now.
Oh, it's okay. I'm on mute. That's why.
Sorry about that. I
It's
saw your
okay.
mouth move, and I just couldn't hear any sound.
No, no,
Right?
no. It's okay.
Okay. Yep. So anyway, that was right now. We're refinancing, and you know, values coming in at it's coming in at 4 million for the two parks. One thing that I'll mention there, and we've done certainly some infill, but these are two that fit the description I gave before, where before we start bringing people in, like, we've got to clean these communities up, make sure, you know, get rid of any criminal behavior and that sort of thing. And I can tell you some stories there, but anyway, we did that. It took us about almost 9 months, I'd say, between the two of them to get them, you know, really cleaned up. But the other thing is, we're always looking for not only top line growth potential, but how do we on the bottom line, on the expense side, you know, what can we do to improve expenses? The park that I told you about that we bought for $900,000, the sellers were out of California, and for the privilege of owning that community, they were writing a check every single month. And the reason is the utilities there were costing them, the water and sewer specifically, were costing them $8,500 a month. So they were spending $100,000 per year paying their water and sewer bills, and they weren't recapturing any of that from the residents. So within 30 days of buying the park, we went and we sub-metered each of the homes, right? So in a mobile home community, you've kind of got your main water line coming in, and you know, from that, once it usually comes into the community, you own those lines. So you can, you know, people lay them out, and they send the water to each pad or each lot, and then they obviously bring the sewer back. But it's not necessarily true that they charge people for their water. So, I mean, there was no consciousness about, hey, people need to conserve water. It was like car wash day every Saturday at the mobile home park, right? Because it's like, hey, free water, you know, come on over. I mean, and anyway, so that was one of the first things that we did, and we were just looking at our Q3 results yesterday. So we went from like a negative 8,500, so we're almost break even now. We basically captured almost $100,000 in expenses that the and the park, like I said, was losing money. I mean, you put that on a 10 cap, that's $1 million right there.
Right. Yeah, I was gonna say that off the bat. Yeah, so congratulations on spotting that. That's amazing. That's a great story right there. Okay, so I mean, I wish I could just keep going and asking more questions, but we're kind of definitely dwelling into the quick rounds. So these are going to be quick questions, quick answers. You ready, sir?
So,
All right. So first question: what makes you, Sam, unique? What is that differentiating factor that separates you from the next guy or the next girl?
I think what maybe is a little unique about me is that I love a new challenge. So I'm always interested in learning about maybe a new market, a new opportunity, and a new challenge. That can be good and that can be bad, but that's who I am.
Awesome. Second question: what was the last book that you read, and what was the one thing that you picked up from that book?
Boy, that's a good question. I really enjoy reading. I actually read a lot of historical fiction, which is probably not what you were expecting here.
No, do it.
But
You never know.
yeah. So, some of my favorite authors are like actually pretty old. I mean, Sir Walter Scott is one of them. Movies have been made out of his books that were written 300-400 years ago. But what I love about somebody like Sir Walter Scott, like Ivanhoe is one of his classic books, is that there you have a hero that to me is a real you can really see and identify with, hey, these are heroic things that this person does. I think sometimes in our society today, like that message gets a little confused about like what does a hero look like, and how can we be a hero to, I don't know, our family, our community, our colleagues, our coworkers, our friends, and I I think there were some things that people realized 300 years ago that sometimes we forget today. So anyway, if you haven't read Ivanhoe by Sir Walter Scott, awesome book.
I gotta check that out. I'm not really
Yeah.
into fiction, but maybe that would change my mind. So maybe I'll check that out. Last question. Of course, you're running your company. And of course, you've got your family. You've got all these parks that you have to visit. You're obviously in California. You've got parks in Alabama. When you're not doing any of that, what do you do for fun?
So we live up in this beautiful area between Sacramento and Lake Tahoe. Lake Tahoe, I'm sure you've heard of, and it's called the foothills area of Northern California. And my favorite thing to do is to go swimming and exploring in these rivers. But just kind of the river sports and those river activities, that is my favorite thing to do.
Awesome. Well, Sam, that sounds amazing. If there's anybody listening and thinking, wow, I really like what Sam is saying and I want to get connected with Sam, what is the best place folks can reach out, learn more about you, get connected with you?
Yeah, so probably the best way to get to us is on our website. So that's saratogagroup.net. And I can also be reached out by email, sam@saratogagroup.net.
Sam, it's been an absolute pleasure. Thank you so much. Now you're going to make me think about mobile
Well,
home communities. I really appreciate it.
all right. Thanks so much. Really enjoyed it.